Is it possible that an asset is flashing, screaming sell signals on almost every single technical chart, while the most sophisticated players in the market are quietly whispering that it is completely undervalued? Right now, everyone in the decentralized finance space is staring at PWRon, the Quanta Services Tokenized Stock issued by Ondo. It is sitting at a massive price tag of $684.91, completely flat at 0% over the last 24 hours. This dead silence in the price action has a lot of retail traders utterly panicked, thinking a massive drop is incoming. But if you are only looking at the surface level panic, you are completely missing the institutional chess game that is playing out right beneath your nose. Let us zoom out and look at exactly what this tokenized asset represents to understand why it is in such sharp focus today. We are talking about Quanta Services, a massive, indispensable cornerstone of the global infrastructure and energy industry. They provide the specialized engineering, construction, and maintenance services that keep the electrical power grid running, integrate massive renewable energy projects, and build out advanced telecommunications networks. What makes PWRon incredibly unique is that it is the tokenized version of this exact infrastructure giant, backed by Ondo Finance. It bridges traditional heavily moated infrastructure equity directly into the on-chain economy. It allows for liquid 24/7 trading, global accessibility, and decentralized collateralization. But despite the massive real-world demand for power grid upgrades, the short-term tokenized chart looks incredibly heavy and exhausted. Before we dive deep into these messy charts, please take a quick second to smash that like button, subscribe to the channel right now, and you must leave a comment down below with your exact price target or thoughts on PWRon. It massively helps the channel with the algorithm and ensures we can keep delivering these detailed breakdowns to you every single day. If you open up the technical charts for PWRon today, the short-term reality is undeniable. The asset is locked in a visible downward trend. We are watching a steady pattern of lower highs and lower lows, showing that the sellers are entirely in control of the near-term price discovery. Immediate momentum indicators are pinned deep in bearish territory, revealing a distinct lack of buying interest at these upper ranges. When you scan the chart for major support lines, the $680 mark is the immediate psychological floor that the bulls are fighting desperately to defend. If the price breaks cleanly below 6080, there is a technical vacuum down to the next major structural support level, which is causing a ton of anxiety for anyone holding. Meanwhile, any attempt to bounce back up is facing a heavy wall of resistance near the $710 level, where trapped buyers from last week are just looking to break even and escape. This clear technical deterioration is exactly why automated trading ratings and sell-side signals are flashing a unanimous strong sell across the board. The short-term moving averages have crossed completely below the longer-term trend lines, creating a classic bearish alignment. Momentum oscillators show that while the token is rapidly approaching oversold territory, a definitive structural reversal has not even begun to materialize. The immediate short-term outlook remains highly defensive, and the path of least resistance continues to lean downward until institutional accumulation builds a visible floor. This creates an intense debate that splits macro investors and crypto traders right down the middle. Is this asset deeply undervalued, or is it a textbook value trap? The bears look at the rolling chart and warn that it is an incredibly dangerous trap. They emphasize that retail traders constantly get destroyed in these specific setups because they attempt to catch a falling knife. They buy an asset simply because it looks cheaper than it did a month ago, without waiting for the market structure to actually shift back to bullish. The downside risks here are heavily multiplied by the native volatility of the crypto market, which can easily drag tokenized real-world assets down regardless of how strong Quanta Services' actual quarterly earnings are. But let us fairly look at both sides of this argument. The bull case rests entirely on a long-term, multi-year value recovery scenario. The global transition to clean energy and the massive power demands of artificial intelligence data centers mean that the underlying company services are going to be required for decades. If macro liquidity surges back into the Ondo ecosystem, or the traditional stock market breaks out to new highs, PWRon could rapidly snap back to test its previous all-time highs, massively rewarding patient accumulators who chose to buy when there was blood in the street. The bear case, however, warns of a painful extended continuation lower. If high interest rates persist and slow down large-scale infrastructure spending, or if institutional funds decide to de-risk out of real-world asset tokens, heavy automated selling will continue. That would force PWRon to shatter its $680 support level and completely flush out the remaining retail holders. In the short term, the outlook remains highly uncertain, requiring strict risk management as the market searches for a true macro bottom. Long term, the undeniable fundamentals of global infrastructure demand will likely reassert themselves, but the exact timeline for that pivot remains entirely unknown. So we are left looking at a chart that says get out immediately, while the core real world value screams that a bottom is right around the corner. Is this a final golden fire sale before an explosive institutional rally, or are we about to watch the floor completely drop out?